Well, let's begin by seeing how markets are doing. Well, that is not very good right now. Asian markets are in deep red today morning, and euro has also suffered heavy losses while oil prices jumped as investors they took fright from reports of a nuclear power plant on fire. This is amid fierce fighting that is going on between Ukraine and Russian troops in many areas in Ukraine. While prices climbed off their morning lows on reports, there was no immediate change in radiation levels in the area. Investors remain extremely anxious. The developments have also sent US stock futures sharply lower, suggesting more pain for European and US markets when they open later in the day. WION correspondent Ira Spitzer sent us this report from San Francisco, US. Take a look.
Reasonable assumption to believe that this is a strategic move by Russian forces to try and disable Ukrainian electricity infrastructure leading up to this invasion. That was certainly something that many people had predicted would be part of the opening phase of this conflict. And in fact, many were surprised that we hadn't seen attacks and disabling of Ukrainian electricity services and power plants so far, or cyber attacks or other sort of tools that that Russia might have at its disposal. So it seems one could surmise, I should say, that this attack could be related to a desire by Russia to try and carry that strategy forward.
And let's take a look at markets. MSCI's broadest index of Asia Pacific share was down. Nikkei down 2.09%, Shanghai 0.63%, HSI of Hong Kong 2.56% down, Sensex down by over 1.3%, ASX of Australia is not spared either, 0.75% down. All markets are in deep red. S&P futures, in fact, they were also down. They paired losses but were still down 0.6%. Nasdaq futures also gave up 0.8% overnight. And yesterday, Wall Street ended lower as investors remain on edge over the Ukraine crisis, while rising prices of commodities also weighed on market sentiment. Investors sought refuge in safe haven US Treasuries, sending yields on benchmark 10-year yields as much as 14 basis points lower to 1.7%. They later inched back up to 1.8%. Meanwhile, oil prices jumped today, once again after ending steady. A day earlier, with the market also focused on whether OPEC plus producers, including Saudi Arabia and Russia, would increase output from January. The Brent crude futures for May rose to as much as $114.23 a barrel. Contract fell 2.2% yesterday. The jump in commodity prices has, however, raised concerns about potential for stagflation, in which rising inflation and stagnant output roil the economy and crimp employment. Aluminium, copper and nickel prices in commodities have raised to fresh highs as widening sanctions on Russia threatened to further disrupt flow of commodities from one of the world's major producers. Gold prices were also up today morning, eyeing their best weekly gain since May of 2021. Spot gold edged up 0.05% to $1,935. In currency markets, euro lost further ground and was set for worst week versus dollar in June. It fell 0.3% to over $1.10 and traded above day's lows. It has lost about 1.8% this week, which would be euro's worst week since June of 2021. WION now available in your country. Download the app and get all the news on the move.